Welcome to Ticker.com's news channel on YouTube. On this channel, we review stock markets, discuss financial news, market trends, and economic data from Wall Street to Global Street. So let's dive in. Financial market sell-off deepened after several central banks announced rate decisions, but it was the worries of the rates staying higher for longer dominated market sentiment. U.S. market indices dropped sharply after weaker than expected weekly jobless claims confirmed strong labor market conditions but also supported the case for higher rates. It is the higher interest rates that worries investors because that reduces present value of future earnings, especially for tech companies that are still in the growth phase. In other words, economy is too strong and labor market conditions are too tight, and the Fed would like things to cool down, and policymakers believe tighter rates may just do the trick. Let's review economic news from the U.S. The Federal Reserve said it will hold the Fed funds target rate range at 22-year high between 5.25% and 5.5% on Wednesday after the conclusion of two-day meeting. The Fed also held out for another rate hike later in the year. Policymakers appear divided after mixed signals from economy, but committee members prefer a more restrictive interest rate policy in the future. The Fed's projections release showed that policymakers are likely to increase rates one more time at the next meeting in November, but are also estimating fewer rate cuts in 2024. Policymakers now estimate that the Fed funds rate at 5.6% by the year's end, and the same as in the June forecast, while rates are expected to be higher at 5.1% in 2024 compared to 4.6% estimated at the end of June meeting. Committee members revised higher economic growth outlook to 2.1% from the previous estimate of 1% released in June, and 2024 growth rate to 1.5% compared to 1.1%. The sharp upward economic growth revision suggested that the committee members are not looking for a recession this year or next, surprising many economy watchers who have been predicting the arrival of recession for the last 3 years. Despite multiple rate hikes by the Federal Reserve over the last 17 months, inflation has stayed above the Fed's target rate because of inflation pressures have been broadening from commodities and manufactured goods to services and wages. Policymakers have little influence over the direction of the commodities prices, but hold a larger sway on the direction of mortgage rates and borrowing rates for the corporations and consumers. Another report on the housing market just confirmed the ongoing trend for 18 months. Higher mortgage rates and elevated home prices impacted home demand and weighed on buyers' affordability. Housing starts and building permits declined in August from the previous month, but housing completions rose. The U.S. Census Bureau and the U.S. Department of Housing and Urban Development jointly reported Tuesday. Housing starts in August declined 11.3% from the previous month to 1.283 million and dropped 14.8% from a year ago to 1.505 million. Single-family housing starts declined 4.3% from the previous month to 941,000, and the August rate for multifamily housing starts was 33,400. Existing home sales declined 0.7% from the previous month to a seasonally adjusted annualized rate of 4.04 million units in August, the lowest level since January, the National Association of Realtors reported this week. Sales fell for the third month in a row and dropped below the pandemic-era meltdown and to the level last seen in 2011, weighed by the higher mortgage rates and home prices. We now turn our attention to economic news from Europe. The Bank of England held its rate steady at 5.25% in a 5-4 vote, and Policy Committee decided to review impact on the economy of the cumulative rate hikes. Policy Committee forecasted inflation to cool in the coming months, largely because of weaker inflation in food and energy prices, despite the resurgence in energy prices last month. The committee also voted to reduce bonds held by the central bank by an additional £100 billion after lowering holdings by £80 billion in the 12 months ending in September. The Bank of England is holding £759 billion of UK government bonds as of September 20th, 2023. Maybe the weakening of inflation also contributed in the committee's decision in keeping rates steady. Consumer prices inflation in the UK slowed to 6.7% in August from 6.8% in the previous month, the Office for National Statistics reported Wednesday. The inflation rate fell to the slowest pace since February 2022, after food prices rose at a slower pace and housing costs declined. Core rate of inflation, which excludes volatile food and energy prices, eased to 6.2% from 6.9% in the previous month, the lowest level since March of this year. On a monthly basis, consumer price inflation rose 0.3%. Central banks in Switzerland, Sweden, Norway, and Turkey reacted to local inflation trends, but sent strong signals that rates are likely to go higher. The Swiss National Bank unexpectedly held its interest rates at 1.75%, but said more rate hikes may be needed to control inflation. The central bank held its inflation outlook 2.2% in 2023 and 2024 and estimated economic growth around 1% in 2023. However, the Norges Bank in Norway and the Riksbank in Sweden lifted rates by 25 basis points. The Monetary Policy and Financial Stability Committee in Norway raised the policy rate from 4% to 4.25%, and Governor Beige said another rate hike is likely after the December meeting because inflation is significantly higher than the 2% target. The Riksbank also said another rate hike may be needed after the policy meeting in November. The Central Bank of Turkey raised its benchmark one-week repo rate by a whopping 500 basis points to 30% and lifted borrowing costs to the highest since September 2003. Governor Erkan raised rates fourth time in a row to control inflation, running at almost 60%. In other economic news, passenger car registration continued to expand in the European Union after chip shortages induced by supply chain disruptions ended. Passenger car registration in the European Union rose 21% from a year ago to 787,600 units. In August, the European Automobile Manufacturers Association, or ACEA, reported Wednesday. Sales in August are generally slower, but a double-digit increase in registration suggested that pandemic-era component shortages are finally easing and automakers are able to meet higher demand. Battery electric car registration in the European Union soared 118% to 165,200 vehicles in August, about 21% of the market. For the first 8 months of the year, EU passenger car registration rose 17.9% from the same period a year ago to 7.1 million units. Despite the improvement in sales this year, sales are still lower than the pre-pandemic level of 9 million units sold in 2019. We now turn our attention to Asia. The Bank of Japan left its key lending rate at negative 0.1% and maintained its ultra-loose monetary policy intact, with its target range between 0.25% in unanimous vote on Friday. Japan's consumer price index edged lower to 3.2% on an annual basis in August, the Ministry of Internal Affairs and Communications reported Friday. Annual inflation dropped to a 3-month low after a faster decrease in energy and utility prices of 12.3% overwhelmed the increase in food prices by 8.6% in the previous month. Core rate of inflation, which excluded volatile food and energy prices, was unchanged at a 4-month low of 3.1%. Japan reported trade deficit of $930 billion in August, second monthly deficit in a row, and the shortfall jumped from $66.3 billion in July, despite rising automobile exports to the United States. Japan's exports declined 0.8% and imports fell at a faster pace of 17.8% in a month. Japan has recorded monthly trade deficit for 2 years in a row, barring June 2023. Japan's trade surplus with the United States surged 38% to 650.6 billion yen. Hong Kong property prices are expected to decline between 5 and 10% by the year's end after 7 largest banks lifted mortgage rates for new loans by 50 basis points to 4.125% from Monday. Several banks, which controlled about 80% of the Hong Kong property markets, decided to raise rates ahead of the U.S. Federal Reserve taking its rate decision on Wednesday. We now review developments in global financial markets last week. Stock markets around the world, except in China and the UK, dropped more than 2% in the week on the worries of rates staying higher for longer. The S&P 500 index and the Nasdaq index dropped 3%. third weekly loss in a row and the worst decline since March after the Fed signaled one more rate hike in 2023 and the rate staying higher for longer in 2024. The U.S. 10-year Treasury yields jumped to its highest level since 2007 and the 2-year rates reached its highest level in 2006. European bond yields touched its highest level since 2011. Market indices in France and Germany dropped 2%, but in the UK fell 0.4% after worries of growth and higher rates dominated market sentiment. China's market indices edged higher on the hopes of a faster economic rebound in the second half. The Nikkei index fell 3.2%, tracking the lower U.S. markets and persistent weakness in tech stocks. The dollar index, which tracks the price of the U.S. dollar against the major currencies, extended weekly gains to the 10th week in a row and rose to a 6-month high on the expectations of higher U.S. rates. The euro traded near its 6-month low after the ECB raised rates in the previous week for the 10th time and signaled a possible pause at the next meeting. The yen traded above 148 against the U.S. dollar after the Bank of Japan left its lending rate unrevised. The euro traded near its 6-month low after the ECB raised rates in the previous week for the 10th time and signaled a possible pause at the next meeting. Crude oil prices advanced for the 4th week in a row after Russia said it will temporarily restrict exports of diesel and gasoline to stabilize prices at home. We now turn our attention to the stock market movers. We're going to start first with the up movers. Cisco Systems agreed to acquire cybersecurity company Plunged for $28 billion or $157 a share. UK regulators said the latest proposal from Microsoft clears key hurdles in acquiring Activision Blizzard. McDonald's Corporation said it will increase annual royalty fees it charges to franchisees to 5% from 4%, the first increase in 3 decades. Starbucks hiked its quarterly dividend by 7.5%. FedEx Corporation reported better than expected results, but quarterly revenue declined 7%, but earnings jumped 23%. Pinterest forecasted revenue growth to accelerate following a slowdown in 2022 and 23. Coty lifted its outlook for full year 2024 and estimates of comparable sales in its fragrance division. Walt Disney said it plans to double its investment in theme parks and cruise businesses to $60 billion over the next decade. Looking at stocks that were on the downside, ARM Holding, Instacart, Klaviyo struggled to stay above their initial public offering prices after listing this week. General Motors and Stellantis are facing wider strikes after the workers' union alleged lack of progress in negotiations. KB Home reported a decline in average home sale price, home gross margin, and in number of homes sold in its latest quarter. Darden Restaurant says comparable sales at fine dining stores declined 2.8% in the quarter ending in August. Rocket Lab USA Inc., the second most active rocket launcher after SpaceX, said the company's uncrewed launch failed on Tuesday and the company plans to postpone its next space launch and will revise lower its third quarter revenue outlook. Scholastic Corp reported weaker than expected sales and earnings on the ongoing softness in retail sales. Looking ahead at the U.S. economic calendar, investors are awaiting durable goods orders, the final reading on the second quarter GDP growth, and personal outlays and income report, including the PCE price index, the Fed's preferred measure of inflation. In Europe, investors are anticipating inflation reports from Spain, Germany, France, Italy, and the Eurozone. In Asia, investors are looking to review minutes of the latest policy meeting of the Bank of Japan, industrial production, retail sales, and jobless rates for August. India is set to release its current account data for the second quarter. That's all for today, and we will see you next week. You can read daily U.S. and global market updates, stock movers, and economic updates on ticker.com and 123jump.com.